today that will see if it might make some sense for your business to participate in. I just want to start off with a few helpful links that has been helpful to Wayne Savings and many other of the community banks that have been trying to ramp up this process. The first one, which I think is still came out came out 2 Sundays ago, and it's still, I think, the best Q&A out there, the most concise information, and that's from the U.S. Chamber of Commerce. For those of you that can see it, it looks like that. It's about a four-page Q&A, very helpful. There's also quite a lot of good information at the Department of the Treasury and at the SBA websites, which is listed there. The Treasury and the SBA are still rolling out aspects of this to both the borrowers and the lenders. So it's always good to keep an eye on those 2 websites just to get kind of the most current events. So let's go to the next slide. First off, as it relates to who is qualified, and the qualification is related to small businesses with fewer than 500 employees that was in business on or before February 15th, 2020, includes C Corps, S Corps, LLCs, independent contractors, sole proprietorships. Also includes certain nonprofits, tribal groups, and veteran groups. The total amount of the available funds under the PPP plan or the Paycheck Protection Program is approximately $350 billion. And to put it into context, how much money that is and what this really means to the Small Business Administration, in 2019, the Small Business Administration made approximately 60,000 loans, and that totaled about $28 billion. So the $350 billion represents over 10 times what that amount is. And just as a point of reference, I believe as of yesterday evening, the SBA had approved the funding of 100,000 loans totaling $30 billion. So still not even up to the 10% mark allocated, but still significantly more than what the SBA normally does in a year in a 3-day period. So moving on to the amount of loan request, applicants are eligible to receive up to $10 million. The amount each business received is based on its payroll costs. The amount each business qualifies for is based on 2.5 times the company's average monthly payroll costs. The monthly average payroll is calculated based on the prior 12 months. We're advising folks to kind of stick to the 2009 time frame for their payroll costs. There's also another method that is outlined in some of the guidance as it relates to seasonal businesses. I thought this would be a good time to see if Jonathan might have his audio solved, because Jonathan is by far the expert when it comes to what qualifies as for payroll, and he's been instrumental in educating us here at Wayne Savings in his capacity. So Jonathan, are you there?
Jay, we are working on his audio. Just keep going and we'll come back to it.
Okay, we'll flip back to that and we'll come back and get Jonathan looped in. So a little bit more about what is included in the monthly payroll costs. So for instance, those would include salaries, wages, commissions. If you pay your vacation, sick days, family leave separate than those from an accounting perspective, you would want to include all of those sort of wages within this total. Also, any payments that you make for 401ks or ESOPs, retirement contributions, group health coverage payments. Now this would only include the employer portion of that. You need to deduct what the employee is paying as it relates to their coverage, but you would also be allowed state and local taxes assessed on compensation, and this would be something similar to unemployment taxes. So you would add up all of those items for the 2019 timeframe. So for instance, what a lot of people are doing is going out and getting their quarterly 941s for their payroll and using that as a as a good way of gathering up what their salary and wages number is. A lot of times it can be that easy. There is a deduction within the legislation, and there's some debate right now about what could be included over and above, or if things could be included over and above that 100,000 level. But most folks right now are taking a look at that 100,000 level, and if anybody is compensated over that amount, they're just limiting the total amount that you would apply for that individual to $100,000. So I think there'll be some more guidance on that, because that's something that is being debated. But for instance, if somebody had a total compensation of about $125,000 in the year, you would only use $100,000 for that individual. And whoever you're working with on this might ask for an employee census that would list the annual wages for each individual, so that they could see if there was anybody over that 100,000, and then they would subtract that from the gross wages. Next, use of funds. These funds are supposed to be used for you to maintain your employees, for you and your employees. Also, that's allowable for rent, mortgage obligations, and utilities. And again, we'll get to this a little bit later, but it's very important that you understand that the covered period, which is the 8 weeks after the loan is made, is the time that you start counting for your loan forgiveness. So it does make a lot of sense to take a look at what your expenses are going to be over those 8 weeks following the funding of the loan. It's critical in making sure you can be as effective as possible with your loan forgiveness. Interest rate on these loans are 1%. The loan term is the same for everyone, and that is 2 years. The loan payments are deferred for the first 6 months. And I think that makes a lot of sense, because a lot of people are going to be calculating what their loan forgiveness might be, and then submitting that loan forgiveness to their local bank, and working with the local bank and the SBA to obtain that loan forgiveness for you. So there's no prepayment penalty. You can prepay these at any time. I think in most cases, what you're going to see is if the loans are not forgiven, if there's anything left over, most banks, I believe, are going to amortize these over the 18 months after that deferral period.
Jay?
Yes, sir.
Let's see if Jonathan can join his audio. If that issue is taken care of. Jonathan? Nope, I guess not.
Okay. Well, I'll keep going, and if maybe we can get him on, maybe we can get him on a little bit later. So let's talk a little bit about collateral and personal guarantees. As many of you know who maybe have participated in the SBA 7A program, collateral and personal guarantees are sometimes required. Under this program, they will not be required. So there is no personal guarantee or collateral required to obtain these loans. I mentioned about loan forgiveness a little earlier, but let's go into the section related to loan forgiveness. Businesses are eligible for forgiveness for the amounts that you spend over the next 8 weeks after receiving the loan. And it's only for qualified expenses. Qualifying expenses of a business over that 8-week period include payroll costs, rent, interest on mortgage debt, and utilities. Came out a little bit later, about middle of last week, it came out that the SBA is going to require that 75% of the forgiveness period, 75% of the forgiveness is allocated for salary and wages. Only 25% of the forgiveness or of the total loan can be forgiven for those other items. So what they're trying to do there is they're trying to make sure that when you're asking for forgiveness, you're utilizing salary and wages, and it's not just a way to use utilities or rent payments or interest on your mortgages. So said it another way, if you have $100,000 worth of a loan, so if you qualified for a $100,000 loan, and if your salary and wages was $50,000 over that 8-week period, then you would be eligible to apply for $50,000 related to the salary and wages. And even if you had another $50,000 for rent and utilities and mortgage interest, possibly, those items can only add up to 25% of the forgiveness. So in that scenario, you would be forgiven for $75,000 of the loan, and the remaining loan amount of $25,000 would be amortized over the 18-month period that we talked about. So multiple SBA loans. Some of you might have SBA loans. Maybe you've had them in the past. You can't have more than one SBA loan. Just having another loan doesn't exclude you from the process, but these loans cannot exceed the SBA's total loan maximums. The loan application process. If you're interested in this program, you should contact your local banker to confirm that they participate in the SBA's 7A lending program, and they're participating within the Paycheck Protection Program. The application is universal and it's used by every participating bank, and that is, it can be found at treasury.gov. You will provide, it's a 2-page document, and then it's 4 total pages when you add in the instructions. I would recommend just reading over that application before you start asking questions. It's very helpful, especially the information on the instructions, and it gives you an idea of what you're certifying, which is a very important part of this process, of what you're certifying as the authorized representative. And it will also help you understand why the banker might be asking for some certain things. So certainly recommend that you take a look at the sample applications online at treasury.gov. The bank will probably also be asking for things such as your payroll records, your payroll tax filings, support for the health insurance premiums, and the retirement contributions. I know a lot has been made of, well, this is just a, the government is just giving away money, but you also need to realize that these are loans to the banks that are participating, and the only way that the forgiveness is granted is if it's with expenses that qualify. So it's the next part of this process, which will be happening in the next few months, will be the process of making sure that you can utilize the forgiveness as much as possible. But remember, this is still a lending. This still is a lending transaction. You still will require things such as a resolution for borrowing based on whatever your corporate bylaws are, or your articles of incorporation. While it is a little bit different in how quick these things are coming out, it is still a lending transaction. It is still a loan, and some of those same things that you're asked for in the lending process, your bank will ask for. So let's go on to the loan funding.
Hey, Jay.
Yes, sir.
Jonathan. Jonathan.
Great.
Just a test, maybe not there. Okay.
Okay, I will keep going.
Okay.
Loan funding. As of this point in time, we've not received any guidance related to the funding of loans, what are the different criteria that we should follow while we're funding the loans, and they've not supplied any of the banks with a sample note, which is what many bankers are expecting. So hopefully within the next few days, we'll get a little bit more guidance as it relates to the funding process and have a sample note. I will say this, one of the things we're planning to do is we're planning to set up a separate deposit account for these funds for each one of our customers. And the reason why is because we want to make sure that we maintain that audit trail for all of our customers. So if at some point in time in the future, they are perhaps asked about the expenses that they utilize or that they paid for with these funds, that they would have a record of that. So I think it might be beneficial to keep these funds separate, pay your payroll, pay your rent obligations and your mortgage obligations through these funds. Keep it separate, keep the audit trail. That's one of the things we're planning to do for our customers after the funding. Also, just want to kind of a shout out to the local attorneys and the local CPA firms that are out there. You know, this program still has only been in existence for approximately 10 days. And much of the implementation has occurred sort of word of mouth, people working together, whether it's how we do the calculation, who might be of interest, who knows of people in industries that really need the assistance of this program. And it's been great to see. I've had a lot of phone calls with local attorneys, local CPAs, other bankers, and we've just been sharing information back and forth because much of the implementation has been trial and error, especially when utilizing the Small Business Administration's E-Tran portal, which unfortunately today has crashed multiple times, and it's running much slower than what it was. But I guess that's to be expected when you have probably 50 to 100,000 loans are probably trying to go through that portal today. I could even be more than 100,000 today. So there we go. Justin and Tom, I apologize for not having Jonathan on the line. He is an expert when it comes to the calculation of the allowable loan and an expert on forgiveness. So, you know, if we could still have an opportunity to get his mic fixed, it would be great to maybe get some thoughts from him, or we could go into the Q&A, and I'd be happy to try my best.
Okay.
What we're going to try, because I have an too. Can I ask you to mute your microphone?
Yes, I will mute mine.
Okay. So maybe that could be part of the issue, because right now I don't think there's an echo. So what we'll do is we'll ask questions, and maybe we even bring Jonathan on if he has some comments he'd like to make, and then we'll
Justin, can you hear me?
Talking. Okay, that way we'll just go through this. So if we have a question, I'll ask the question, and then then I'll mute myself, and then you can answer. But with that, let's try it one more time with Jonathan. So I will mute myself and we'll bring Jonathan on.
Can you all hear me?
Yeah, Jonathan,
Justin?
we can hear you.
Is it is it working okay? No echo?
Yes, no echo.
Great. Well, apologize for all the confusion. I guess that's the world of all of us being where we're at. Jay, I don't know if you want me to jump back in, if you want to move back to certain slides, if you want me to kind of talk about the includable costs. I'm happy to jump in and do that, you know, rather quickly. And from the looks of my screen, that looks like where you're heading. So again, I think, you know, one of the biggest problems with this is there's conflicts here in the interim guidance from the SBA in the context of how they're defining compensation, wages, and salaries. And over the last several days, that seems to be the biggest debate as all the banks, attorneys, and folks like myself look at this. I refer to the payroll costs for purposes of the 12-month average as being what I call fully loaded. So what you're truly starting with is the salary that you pay somebody, but then in addition to that, as indicated on the slide there, you're adding to that retirement contributions that you make on their behalf, health insurance premiums that you make on their behalf, and then certainly Bureau of Workers' Compensation paid to the state of Ohio. You get to a fully loaded, what I call payroll cost. Some of the other confusion that comes in is whether or not that cost is capped at $100,000. Now, again, there seems to be some disconnect between the language in CARES as well as the language in the interim guidance by the SBA. And I do believe one of the senators this weekend even tweeted to that effect. Basically, what you have here is you have two schools of thought. Some are saying that the salary is capped out at $100,000 fully loaded, and then you've got another saying that actually the true salary that you pay the employee is capped out at 100,000. Then you go ahead and you add the loaded costs on top of it, i.e. what do you get? You can get a payroll cost as indicated here on this slide in excess of 100,000. At this point, in all honesty, we need more guidance or true guidance from the SBA because it is not clear which is the correct answer for that calculation. We do know this, the calculation of the 12 months was indicated in CARES as being the most recent 12 months, but the SBA interim guidance has indicated that it is the 12 months of 2019. So again, they're a little bit in conflict, but at least we have at least a clearer picture from the SBA's perspective. Jay, I don't know if you want to forward next slide, if you wanted me to make any comments here. Yeah, let's talk about loan forgiveness. Couple of things here we need to discuss. If you look at the interim guidance, the way that it's written, if you basically, as indicated here, if your full-time equivalent employees don't decrease, your payroll costs don't decrease during the period, and you spend no more than 25% of the loan proceeds on non-qualifying payroll costs, the rent, interest, the mortgage, debt, and utilities as indicated, the loan will be forgiven. That's the way that it's written. There is a school of thought that is going around today that may not be the absolute answer. In other words, if my full-time equivalent employees do not change, my payroll costs do not change, and I spend no more than 25%, it could, on non-payroll, it could be that I might end up with a portion not forgiven. Why would that be? There's ambiguity in the interim guidance as written right now, where it appears that the intent here is to not have forgiven the employer's share of the payroll taxes deposited with the federal government from PPP program loans during this period that you're paying it out. In other words, it's as if the government is saying, I'm not going to give you money in order to turn around and then pay me back my money. I know for many on this, that may seem a little bit ridiculous, but that seems to be another area with which we need to get clarity and certainty here because that one appears to be open at this point in time. Jay, you might want to jump slides. I think that's all I wanted to kind of comment there. Yeah, I think that's the context of it, but certainly I'm happy to answer any questions that you've got. And I can read them on screen as well.
First question here, and then Jay, when you speak, let's just make sure everybody else's mic is off. That's where we're getting our feedback, it appears. What about applying? We have some businesses that have already applied for the economic injury disaster loan. Are they still eligible for the PPP?
They are, and in fact, you can actually refinance that EIDL or the Economic Impact Disaster Loan into the PPP program. That is out there. If you go to SBA, the interim guidance is there and does speak to in the example as to how to roll that in. I mean, in a nutshell, you're basically calculating your cost under the PPP to come up with your loan total. And then from that, you're kind of subtracting out the EIDL. So that'll give you your incremental PPP. That way you can roll it in there. The one thing I do know is you can't double dip on the $10,000 grant because that grant's being forgiven under that program. So you can't get the same covered under the PPP.
Okay, here's a question for as far as eligibility regarding nonprofits. And some things I've read, they're very specific. It's only 501c3, and I think some veteran organizations as well. And then other things I've read, it seems very broad. Can you talk a little bit more on that?
I'm sorry, can you repeat that again?
Yeah, can you be specific to the nonprofits as far as the eligibility, like churches, things like that? Is it very specific to 501c3, or is it becoming a little bit more broad?
My understanding, again, it was specific to 501c3s. I don't know if it's gone that far to expand the reach or the guidance on that, but last I look, it was to 501c3s. But again, I know that's in the interim guidance. That might be worthy to check back to, but my understanding was it was 501c3s.
Jay,
Again, those that meet the eligibility requirements, though, for employees and the like.
Jay and Jonathan, we have a number of businesses that are eager to apply because is it true that once the $350 billion in the PPP program is gone, essentially a first come, first served basis, and do you encourage people to get their applications in as soon as possible?
That is true. That is my understanding. This is first come, first serve. So once it's fully funded, I would say it would cease at that point. But as I'm sure many people have seen from the members in Congress, that there is an intent when they recess again, when they come back, on April the 20th, to consider what I'll call version 2 of this for additional stimulus monies. I think the president was even on record over the weekend to as much as saying that as well. No guarantees, but that is the understanding.
Okay, we have somebody that wants to ask a question live. Miranda, can you cue him up? And if we can't, we'll just go to the next question. Go ahead. We'll come back to them.
Yeah, maybe a quick overview as to what documents to prepare when going to your lending institution. Also, there was a couple of questions that came in saying that my lender is failing to get back with me. Are there other ways for me to just go to another bank and take care of getting the application in?
Well, let's let maybe Jay speak to the latter part about whether or not, if you're not getting access through your current lender, whether or not you can go to another. What I'm seeing, first of all, on the documentation that most banks are looking for submission is, one, a complete copy of the prior year's 941s, an internal income statement balance sheet for 12/31/19, a summary of payroll for the prior year, and then at a minimum, a copy of your prior year return, which in many instances is 2018, as folks have not completed 2019 under the deferral. Those are kind of the minimum. What we recommend is that you actually calculate that 12-month average of the payroll costs fully loaded, as I indicated, and supply that computation along with what you submit to the bank. But I have seen banks be kind of all over the board, in all fairness, as to what they're looking for as everybody continues to try and navigate this.
Jay or Jonathan, this was a question pertaining to some of the covenants that banks have with customers. So if you're taking on these additional loans and you had some additional equipment and purchases that you wanted to make, can you go ahead and do this, or are these loans going to restrict you in any capacity?
Is this someone asking, can they use this loan to purchase equipment?
Not necessarily, but they have plans to purchase other equipment with other dollars. Can they tap into this loan and can they go ahead and make the additional purchases with the additional money that they have set aside?
I mean, yeah, it seems right pocket, left pocket. So again, if they've got sufficient funds currently, I guess they're making the argument that they're not using the proceeds from the PPP loan in order to do that. Ultimately, on the back end of this, there's going to have to be some level of due diligence to determine the use of the loan proceeds and certainly what those were spent on. I would want to believe that Treasury, SBA, and everybody would understand that most folks didn't come into this with a zero balance sheet of cash. So they had other sources of liquidity available to them. So I'm going to go out here on a limb a little bit. Think you need to be able to show that you took the PPP monies and you spent them in accordance with the plan on payroll, and you spent the remainder on your overhead costs, including loans and interest that were already in place prior to the application or the program for the PPP. But Jay could certainly have some perspective on that as well.
I agree with you, Jonathan. I think getting back to why it's so important to have the audit trail and the funds separated. I mean, we don't know right now how the government's going to come back in and take a look at the process that people are utilizing to track what their expenses are during that covered period. So, I mean, I think you should just focus in on using those funds for their intended purpose. Now, if your revenue really hasn't been impacted much and your salary and expenses really haven't been impacted that much, well, then maybe at the end of the day, or when we actually come out of this pandemic, or when we're able to return to some semblance of normalcy, maybe it ended up being a positive for your cash flow, and then you might have more cash than when you came in with it. I guess it just depends on what's happening with each individual entity, but I certainly would advise everyone to use the funds for what their intended purpose is, and to maintain a record of those.
Actually, a couple questions here now that we got Jay's audio figured out. What banks are participating in the program was a question. And then, will the banks be responsible for determining the reconciliation of loan forgiveness, or will the federal government have a role in determining that amount?
Well, I know we are, and I'm through the grapevine, I know locally we've got Farmers National and CSB. I'm sure I've heard the larger banks are now kind of getting on board with this and participating. I think I've heard Huntington is participating. I got to imagine that most of the larger banks, especially the ones that have been participating in the 7A program, would be participating. It makes a lot of sense. It's a lot of work, but it is real dollars coming back to your communities. So I know I noticed some questions out there related to I might be working with a bank that's not participating, and can I still reach out to folks where I'm not at a bank where they're maybe not my principal bank, but maybe I have another relationship somehow. Yeah, I think you just need to reach out and find out if you can find some other lenders who are allowing people to participate. I know Wayne Savings has been open to helping customers where we don't have a business relationship, or did not have a business relationship, but we view this as something that we need to do for the community, to try to bring as many of the CARES Act dollars to our community that we can, even if they're not a customer. So hopefully I answered that question.
And hey, Jay, I can add a little bit to that loan forgiveness. I mean, even if you go to the interim guidance from SBA is out in front of this, saying that they need to issue additional guidance on the loan forgiveness. Obviously, there's going to have to be some interaction on the back end of the bank with the SBA to, determine what was eligible, what wasn't eligible, and an accounting for it. But at this point, there's no roadmap to it.
Right, and I'm sorry, I probably didn't. Thanks for the help, Jonathan. The way I think this is going to work is there's going to be probably over a million loans when this is all said and done. I don't think the federal government, again, for instance, the SBA normally deals with 60,000 loans in an entire year. I think there is going to be some process where the local bank works with the borrower to submit some sort of a file or some sort of an application for forgiveness. And then that would have some sort of verification procedures, and then that would be submitted to the SBA for review. And I believe the legislation even speaks to that. And I'm not sure if there's a 60 or 90-day period. I think it might have been 90 days, but it could have been 60 days. But I think the SBA has been given a 60 or 90-day window that they need to respond back to that forgiveness. So while you do have 8 weeks to work with this covered period, I don't see the loan forgiveness decisions occurring until maybe the August, September timeframe, and maybe even October.
Okay. So we have questions regarding the payroll. In fact, several of them. When you're calculating the payroll costs, is it gross payroll? Is it net? Are we deducting taxes in there? Are we purely looking at the last 2019, those months, or are we looking at the past 12 months? So there's just a lot of questions regarding payroll. If you could maybe kind of go into a little bit more detail about that.
And then Tom, to kind of piggyback off that too, is health care premiums, are those to be allowed as payroll expenses as well?
Sure. Well, that's a lot all in one thing. So let's try and break them down. First of all, I think the question was raised, are we talking about gross payroll or net payroll? And I think that question is coming about because there's confusion in the interim guidance under what's considered excluded compensation or wages for payroll taxes that are being paid in the cover period February 15th through June 30th of 2020. Interestingly enough, that's come up over the weekend. Marco Rubio was already out there and said it was the clear intent of the legislation that it would be on gross payroll. Again, if we were using net payroll, the dynamic is adversely reaching a goal, if you will. If I'm paying an employee $100,000, but net is $70,000 after all the payroll taxes, getting $70,000 from the federal government does not allow me to maintain that employee at $100,000. So he's already come out and said it was their intent when writing the bill that gross payroll would be applied to the calculation to ensure federal withholding and FICA. That burden of it was not on the small businesses that were applying in the program. I think where the ambiguity for this is going is kind of where I alluded to earlier. There is a school of thought that on the back end of this, when you go to do the loan forgiveness calculation, as we were just discussing, that those payroll taxes paid during the cover period could not come from PPP. So in other words, if you used your PPP and you're paying all of those taxes during the covered period, there would be a potential on the back end for some folks right now that would think that those costs would not be forgiven under the program. Again, that's a think tank thing. I can't tell you that that's definitively there. I know there's a lot of folks asking SBA for guidance on that, but I think that's where the uncertainty is coming in as to whether or not it's gross payroll versus net payroll. Now, when I say gross payroll, I'm still talking what I refer to as the fully loaded payroll. So if I have an employee that I pay $50,000 a year, that's their salary. That includes overtime, holidays, sick time, paid time off. That's what I pay them, $50,000. Their fully loaded cost is $50,000 plus my share of healthcare I contribute on their behalf, plus any retirement benefits that I contribute on their behalf, plus any state unemployment taxes that I contribute that's based on their payroll. So when we're talking gross payroll cost, it's not just it's not what I'm just paying someone. It includes all those other layered aspects that are on top of that to come up with the true gross payroll for purposes of determining the average in the prior 12 months. Did I hit on all those, or did we miss one of them in there?
I think you hit on quite a few. And in fact, because somebody even asked about allowances, like like car allowances or there's housing allowances, things like that. Can that be, sometimes that's under compensation. Is that included?
You know, there's nothing in guidance that speaks to what we call inclusions, which is what that is. You know, again, in my example, if I make $50,000 a year, that's what you pay me, but you also allow me to use a company car, and because of that, at the end of the year, that personal amount is, say, $3,000, and that ends up in my W-2, so my total is $52,000 of taxable wages. There's no guidance on that at this point, so it's very hard to say whether or not those would be includable. My gut says we're always going back to the 941s in this testing, so anything that gets us close to those numbers with the add-ons is probably acceptable in the program. Because of how quickly it's moving, I think you just need to work with your bank to where their tolerance is, and Jake can kind of speak to this, because they're doing a certain level of due diligence, and they're understanding that this is not black and white. This is beyond gray at this point. And so you're just going to have to use some reasonable judgments on what you want to include in order to go ahead and get your loan started and through the system. But I mean, in all honesty, I don't have an answer for that because there is no clear guidance on it.
Yeah, Tom, and if I could just add something on to what Jonathan was, a shameless plug to the CPAs out there. There's a lot of good local CPAs that understand this program, and I would, if you still have questions after this, reach out to the CPA that you work with or the local accountant that you work with. Chances are they probably have had some questions related to this and might have, because they have an understanding of your organization, they might have a quick answer for you. And then I think, I'm not sure if we hit the answer on the loan covenants or other loan covenants are out there, but that was an astute question. And just wanted to make sure that if you do have other loans out there with loan covenants, you need to talk with those banks so that they waive those covenants for you. That's a real concern. And again, that might be an opportunity to talk to your attorney.
Yeah, that actually was my question. You clarified it and put it in a better perspective for me. Thank you, Jay. I appreciate that. So it sounds like one of the key things, and you just alluded to, and Jonathan's alluded to, is really get in touch with your banks, your local banks, or your CPAs that you're working with, because they will be able to answer a lot of these questions for you. As I've kind of surveyed the land, it seems like most of the banks in our area are participating in this program. So I would encourage everyone to contact them and ask those specific questions, and they'll probably be able to walk you through the process. So yeah, thank you.
Yeah, Tom. I mean, most discussions that I've had with the different local business owners probably have lasted at least 20 minutes, if not 30 minutes, just talking through the issues. Every business is a little different. Every industry's been hit a little bit differently, and there's also been discussion about how can I most effectively use these funds. What's the best time to start that 8-week window? That's a discussion that a lot of folks have been having. And what do we get? Is there some flexibility of when that 8-week window starts? I also mentioned to folks that this is an 8-week window, so let's make sure that we get the 2 utility payments and 2 rent payments, et cetera, in that window. Managing that 8-week period is pretty important, because it's a dollar for dollar forgiveness if you can load something into that period.
And I'm seeing there's a couple of questions online that I think are at least worthy of mention here. One is asking whether or not guaranteed life insurance, short-term disability, long-term disability are considered as health coverage for purposes of my fully loaded payroll costs. And I'm going to say to whomever asked the question, that's going to be how you interpret the interim guidance and the literal reading of the provision. Because the way the provision reads is it is payment for the provision of employee benefits consisting of group healthcare coverage, including insurance premiums. And then it says, and retirement. So the question is, are you reading that as a, for example, including healthcare coverage, or are you reading that as all inclusive? There's absolutely no guidance out there that addresses anything beyond the words, consisting of group healthcare coverage in the interim guidance. The second question is, can independent contractors be included in the payroll calculation? I've read they have to apply for their own on the PPP loan. Again, confusion between some of the interim guidance and the CARES Act. Independent, let me put it to you this way, a business applying for the PPP loan cannot include in its payroll calculations the amounts they pay for independent contractors. It's their employees only is what they include. The independent contractor, however, someone being self-employed, can apply for a PPP on their own behalf. But certainly that question's coming about because there is confusion between the two, the act itself for CARES and then the interim guidance that's out there. So those are two questions I thought were worthy of some further clarification.
This is probably a quick question, gents, but we have a number of restaurants that are asking, are tips included in that payroll calculation?
Yes, and I think if you even look at the interim guidance, they're saying, it does include cash tips or similar compensation. And again, if you don't know it exactly, they're saying it's based on employer records of past tips, or in the absence of such records, a reasonable good faith employer estimate of such tips. So they're clearly in there. You just have to come up with a reasonable approach, should it not be so obvious from your filings as to what those amounts would be.
One other quick question here. What about ownership of businesses? Does that affect eligibility? There are a number of companies that are not held essentially locally. They have investors that are foreign essentially.
So again, this is compensation based on individuals whose principal place of residence is here in the U.S. So you can have a foreign company that owns a U.S.-based company that does employ U.S.-based individuals. They could apply under this program. The one thing you have to keep in mind, it's not specifically clear from the guidance, the interim guidance, but you can find it through the SBA. There is basically an attribution or an aggregation of ownership test that you have to go through. As you know, this program is supposed to be designed for 500 employees or less, or certain protected industries, if you will, that are also shown on the SBA website. So what you've got to do, if you think of it like maybe in the sense of venture capital or private equity, they own multiple companies. You have to look at the commonality of ownership of those companies. And if you aggregate all those companies together and they exceed 500 employees and they're not a protected business under the SBA and the code listings, then they're not going to be eligible to apply for the PPP, even though one company on its own may be lower than 500 employees. So you do have to understand the ownership, and then you've got to have the ability to look at the owners and any other businesses that they own and see if you're running into that attribution problem under the SBA guidance that's out there. And that SBA guidance isn't new to the PPP. That's SBA guidance that's been out there already. So you just have to walk through the calculation and make sure you don't run afoul of it.
Okay, and we're kind of running up towards the end here, but I had one question. Since many of us do not know how this is really going to impact our business, if we do have extra cash flow and we do share profits with our employees in December, will there be ramifications as it relates to these loans taken now and used properly to support payroll and utilities during the covered 8-week time period?
If I understand the question, I think someone's asking if we have some type of participation with the employees based on profitability at the end of the year. Is that what's being asked? Would that cause? I don't see this causing a problem.
Yeah,
That's my short answer.
I'm sorry. Go ahead. My fault.
No, I was just going to say my short answer is I don't see a problem at the end of the year if you're paying out profits bonus to employees. This program is built upon this 8-week period and whether or not you're utilizing the funds, right, in accordance with the program and whether you are an eligible business under the program. I don't think it's, looking towards the end of the year as to whether or not you share profits with employees.
So Jay and Jonathan, it is 3:58, so we're up against our hour. A couple of things that we want to do is, thank you for participating today. We have 21 questions that came in here on the board. I know Tom and I were going back and forth. We received some via email. If you have a question, please submit those to myself, to Tom Pukish at the WEDC, or Lori Reinbold at the Orville Chamber. What we will do is we'll put those questions in a shareable document, and we'll send those out to all the participants. We'll lean on Jay and Jonathan. Again, thank you, gentlemen, for doing this today. We'll lean on you, gentlemen, to answer as many questions as you possibly can, and we'll send that out. We'll also send out the PowerPoint as well. So, Tom, what did I miss today?
No, that was great. Once again, I can't thank you enough, Jay and Jonathan, for participating in today's program. This is great information. And once again, you can see by the interaction of the participants and the questions. So there's a lot more questions that need to be answered. I know there's a lot of changes out there, but I appreciate you bringing this. And I think it was very valuable to our participants. Thank you.
So with that, we'll wrap it up. And again, if you have questions, make sure you get those over to us so we can send that document with all the questions answered. Thank you, folks. Be safe. Take care.
Thank you.